Hello everybody, welcome back to The Contrarian. It is that time of year again, and it's time to start digging into 13F filings as they come out. And specifically today I will be diving into Michael Burry's 13F filing for the third quarter of 2021 for his hedge fund, which is Scion Asset Management. And it's important to realize before I go into this report that this is in retrospect. It's during essentially a beginning of July through end of September, so third quarter of 2021. This is essentially a snapshot of what Burry's portfolio was like basically at the end of September and what changes he made in the third quarter. It does not give us a position of where he is right now, but it can give us some clues as to how his mindset has changed in the last 5 months or so since I last talked about his second quarter 13F filing. And these changes are significant. He basically sold out of most of his positions out there and is heavily in cash right now. So this is a very significant filing for me to dig into, just trying to get an idea as to what Michael Burry's thinking might be in terms of what he is likely forecasting might happen in the near-term future in the economy. Without further ado, I will dive into this report. Essentially, he only added 3 new positions with Lockheed Martin, with Distribution Now, and then with Scion, which I did not know what that company was before. It's essentially a small cap healthcare stock, but those are the only new positions he added. He maintained a CVS position, which is by far his largest position right now, almost 41%. He added Lockheed Martin, which is around 25%. He he trimmed his Geo Group position down some 53%. And that's still, 21% of his portfolio in the stock market. Course Civic, he trimmed 68%, and that's now about 9% of his positions. And then Distribution Now, he added that. It's almost 3%, and then Sky Nexus is about 2% of his portfolio. And this is only his portfolio looking at that which is still in the market. It's definitely not including his cash position, which has definitely increased, because looking at all of the positions he sold out of, it's very, very large. Basically, despite trimming Geo Group and Course Civic, he essentially sold everything out 100% with the remaining positions. So he sold out of SunCoke Energy, Google, which are calls. Surprisingly, he sold out of puts on ARK's investment ETF. He sold out of McKennis and Walmart, which are both calls, as well as Discovery. Also, surprisingly, he sold out of his Tesla put positions, which I will talk about that in ARK later. He sold out of his Facebook call position that he held, Kraft Heinz call, CVS call. He sold out of his Voyager, which is kind of a investment finance type company. He sold out of his Cardinal Health, his TLT put. He sold out of his TBT call. So essentially, he sold out of quite a bit. A lot of this could have to do with simply option expirations. But specifically talking about ARK Invest and Tesla, Michael Burry might have broken even with those positions. It's a little hard to tell just in terms of within that period of time there was a lot of volatility. It is a little strange as to why he waited until the third quarter to get out of those positions, just because specifically with Tesla stock was down, lower in the second quarter than where it was in the third quarter, and since then Tesla has really rallied significantly and is back close to all-time highs, but is definitely selling off now in light of Elon Musk essentially dumping a lot of his shares out there. But essentially what I'll try to get into now is what is Michael Burry thinking, and we do have some hints. He's obviously tweeted substantially in the past about the current bubble that he sees going on, and he's been very explicit in terms of describing this as the most extreme bubble of all 3 of the ones that he's been a part of. This is a recent tweet just a few days ago. For what it's worth, I've never shorted any cryptocurrency. This is my 3rd bubble and the biggest. I've learned a thing or two. 30-year treasuries, on the other hand, have not. And so that could have something to do with him selling out of his bets on rates rising, which probably didn't play out very well for him, just in terms of where he entered that position and where he exited that position. It probably didn't work out too well for him, just in terms of the specific timing on those call and put options, which timing is key with options. That's really the big downside of options, is you have to get the timing correct. You can't just be in the right place. You have to also be in it at the right time, and so that's a real challenge with options. So these are just a few of my thoughts as to why Michael Burry could have sold out of all of these positions, setting aside all of his statements on the whole mania that is going on in the market right now. First reason, he could be reassessing his portfolio. Essentially, his portfolio has grown immensely in the last year. This is mostly due to a lot of his positions working out extremely well, specifically GameStop and a lot of the energy stocks that he's been in, as well as a lot of the call and put options he's purchased in the last year. Michael Burry has really been on a roll in terms of outperforming the market. Just looking at a chart, which I will throw up, his fund, Scion Asset Management, has greatly outperformed the S&P 500 in the last year. Obviously, it has not always been the case, but in the last year, he's really been killing it. So this could essentially be Michael Burry almost stepping back a little, trying to reassess what his macro sort of strategy could be going forward, and then going forward with a new sort of strategy. So it could be sort of a pause in terms of him actually being very active in the market. The second thought of mine is this could be Michael Burry sitting on a substantial cash position. Essentially, this would be in line with his bet that this is an extreme bubble right now and that the markets would experience a significant bear market in the near-term future. So if you do think such a thing is very likely, sitting on a large pile of cash would be a great position to be in terms of then you would be in a very good position to scoop up a lot of deals when you see them, whenever the market does begin to bottom. So this is a second thought of mine in terms of why Michael Burry might be very cautious right now. Now, a third thought of mine in terms of Michael Burry's current positioning could simply be that of his risk reward benefit assessment right now. So he could essentially be looking out there in the market and seeing all of the extreme hysteria and fear of missing out that is going on in terms of cryptocurrencies, in terms of meme stocks and everything like that. He could just essentially be sitting back and saying, I don't see enough benefit to take that kind of risk. And this is obviously completely up to Burry himself. He needs to kind of be the judge of how much risk he's willing to take for himself and his clients. But this is probably the third option that I would put in Michael Burry's portfolio assessment, in that he's probably just essentially done a risk-reward analysis of the markets out there, and he really doesn't see many things of value that he could purchase in this kind of a market. So these are my thoughts on Michael Burry's updated portfolio. He did sell out of a lot of positions. I was not really expecting it to be this dramatic, but a lot of this could be due to a lot of the news headlines that we saw during September with regards to Evergrande and China and the whole real estate market meltdown that started back there in September and is still escalating today. So a lot of this could be Michael Burry's initial reaction to the Evergrande story and the story of the slowing of the economy in China. Obviously, we will really have to look at his fourth quarter assessment 3 months from now, and we'll really be able to see how he changed his market view from where it currently was back in the end of the third quarter. But this was a big adjustment for Michael Burry. Just comparing the second quarter where he was to the third quarter, it was a really, really big change. He sold out of most of his positions, and it was just a big shock for me. But all of this being said, let me know what you guys think about this down in the comments. If you like this video, just consider subscribing to this channel, and I hope to see you again at some point.